Look, I'm going to say our prognosis has got worse in the last 10 years since I started this organisation. Climate change impacts are happening far faster than anyone thought. You know, I think there's a real shot of not getting 4 to 6 metres sea level rise, but getting 25 metres sea level rise by the end of the century.
But that's in Northern Europe, it's Antarctica is melting. That affects Northern Europe and the opposite.
Well, Denmark goes entirely.
Obviously.
You don't have any land above 25 metres as far as I know.
Small mountain.
Do you?
Small
Okay.
mountain area. But,
So, I mean, you can build big dikes. That's a pretty big dike you've got to build.
But Denmark is completely surrounded by sea, so it's
just not
close to
possible.
impossible.
It's just not possible. So, you know, we will end up having to have withdrawal from the coast, you know, and, you know, it could be the making of us as a species if we can figure out how to do this in a collaborative fashion.
Also see if it
But
affects
not
real
doing
estate prices.
It will do that. But we haven't had a great history the last couple of years. Like, I mean, the mess we've made of migration from Syria in terms of working collaboratively doesn't bode well for us to deal with really severe stresses. We're going to go ahead. So it's worrying.
Yeah.
Which is why I think there is a pretty reasonable chance that we will descend into a new age of barbarity.
Doesn't sound comfortable.
No, it doesn't. And I mean, and I didn't tell the real story out there. The reason people die is epidemics. So when societies collapse, actually, we know from history, every time there's a major shift in climate, you get the plague or something like that. And that's how most people die. It's not wars. It's actually epidemics. And no one can hide from that. That'll hit you in Tromso as well as in Bangladesh. And that's where so that's why we're likely to lose a big chunk of the world's population anyway. Don't worry about population growth anymore, frankly.
Oh, that's...
worry about other problems.
So...
Well, no, seriously. Yeah. No, we now know that the medieval Black Death was associated with a significant shift in the world's climate, the medieval warming and then cooling period. We know that in the 1660s, when the Black Death came through Europe again, it was directly tied to the invasion of the Americas, which led to 90% of all the people in the Americas dying in 100 years through smallpox and so on. Yeah. And curiously, a massive regrowth in tropical forest. And that massive, like unbelievable regrowth, we're still uncovering cities in the Amazon we didn't realise existed out of the tropical, sucked a lot of carbon out of the atmosphere. And that led to a global cooling period. And the Thames River in England froze over for the first time in recorded history. It's climate change, and the plague came through. Because it always does when we have a severe shift in climate. It's one big ecosystem. So, you know, we're in the middle of a rapid change anyway. So realistically, we're going to get epidemics beyond the threats we currently have, which the World Health Organization says, because of the disruption of our climates. It's really a matter of just how severe it is. You know, whether
and when it occurs.
You know, we're probably going to have a loss of life equivalent to the flu in 1918. I mean, the World Health Organization says the chances of 100% we're going to get that in the next 20 years. So that's 20 million people that died then, I think, around the world. Really, the issue is, are we going to get waves of these and lose 2/3 of the population? That's the question.
That's the worst case. So
it's all grim talking like this, isn't it? But like I said, I do remain optimistic.
Yeah.
Because I think the human species can respond positively to crisis. You know, you see it in cyclone behaviour. People come together in cyclones. As much as they try and loot, they also actually help each other out. So it's a funny kind of disruptor. So it's really a matter of how we manage crisis. That's really what we're going to do. And then I do think we've still got a chance of tempering the worst of climate change. But it will require total decarbonisation very quickly, much quicker than anyone's seriously thinking about. It will require halting and regrowth of the world's forest by about 50%, through, you know, which would really mean turning large chunks of the world over to first rewilding in tropical zones, which we need for species biodiversity. The only way we improve our ecosystem resilience is increase biodiversity by allowing unfettered wilderness in different areas. At least 15% of the world oceans has to be marine parks to survive our fisheries. So if we do all of those things, we've got a chance. That means we've got to become urban animals. We've all got to shift into the cities. We're currently at about 52% or 55% of people living in cities. It's got to be 80% in the next 30 years.
I guess that development will come automatically if you look at the past.
It's happening. It's happening. It's really, you know, mainly it's a matter of whether we do it fast enough and whether we do it green enough.
So now we're going to discuss these green bonds, as I mentioned. How do you see the current narrative of these green bonds when you address conferences like this?
Look, there's a palpable excitement about green bonds as evidence that we can do something, as evidence that we can get investors to invest if we give them the right offering. We just got to give them the right offering. It opens up the whole discussion about how do you engineer this, which is, of course, what structured finance is about, what blended finance is about, always has been. We just haven't been thinking creatively enough. And so, but if you do, they'll invest because they want to invest because they're worried about long-term risk, long-term assets and liabilities matching. And that's what green bonds, that's the excitement around it. It's a proof of concept. It's not a final solution, it's a proof of concept. And yeah, everywhere I go, and it comes government officials, they say, okay, so how do we get some of these green bonds to fund our climate change plans? You open the door to the discussion, which has been moribund for the last 25 years, frankly, in the sense that people haven't done enough, apart from a couple of countries like Germany on solar and Denmark on wind.
Yeah, we have the pension funds use a lot of blended finance where they got the government backing in, for instance, a climate fund launched by our foreign ministry, where the pension funds are the private investors and the government is their official investors.
Exactly right, and that is an exemplar fund. We just need 400 of them. But that is, but you know, that shows you that it's been done. It's not rocket science. We can do it. We just need more of it. That's all. So our public sector pools of capital have got to be allocated to taking that junior piece in funds to make it possible for the big pools of capital to invest. Well, where do most of our public sector pools of capital exist? They exist in development banks and import-export agencies. We don't even need to raise new capital. We can just reorient what we've got.
Yeah. And how do we achieve this? How do we make this paradigm shift, if we call it that? How do we make this intangible accessible?
Well, I'm going to say there is nothing like deal flow headlines to get people excited. So from an investor perspective, ask for more green bonds, please. Get down on your knees and go to the companies like BMW. Please issue a green bond against your electric vehicle fleet. Please. Because not only do you get stuff you can put in your portfolio, but you grow the theme. You get the headlines, you get governments excited, you get a whole palpable sense of energy around the possibility of a transition to a low carbon and climate resilient economy, which has been lacking for 25 years. So that's why we've got to do this. It doesn't mean that the hard work of understanding urban planning, regulatory measures isn't necessary. It is. But you know, like anything, if you go on a walk and you go in a sort of derisory or depressed fashion, you're not going to get very far. If you go for a hop, skip and a jump, you're going to go very far, right? So we've got to make sure that green is a hop, skip and a jump story. And green bonds give us that. That's why.
Yeah. So what are the current trends when discussing green bonds?
Sovereigns, signalling, policy, driving policy. We now have a good sovereign market and it's going to balloon in the next few years. One trend. Asset-backed securities, real risk shifting over to investors. Fannie Mae, Freddie Mac have done $60 billion of asset-backed green bonds for green social housing and green buildings. China, gone from zero to hero in 2 years. $80 billion of green bonds outstanding already in that market. They've got a target of 20% of the whole bond market being green as quickly as possible. They're about 2% now.
And that's political driven.
Yeah, top down, but it's still a market. They've still got to give people to do it. They've got incentives. Like I said earlier, you know, the central bank now gives you a 1% discount for liquidity lending if you have green bonds as collateral. It's simple, right? It doesn't cost anyone much money. The ECB could be doing it tomorrow.
So you actually believe that the Europeans, for instance, the ECB should pay attention to what's happening in China
Yes.
to achieve this?
Yes. We're stuck in this ridiculous view that the struggle is to make the playing field level, and we can't do anything to adjust that. Guys, the playing field is tilted so far to brown that we are killing the planet. You know, there's a paper by LSE Grantham on the inadvertent negative effect of QE. London School of Economics, Grantham Institute of Climate Change.
Okay.
On the inadvertent effects of quantitative easing, which is to lower the cost of capital for oil companies. If that isn't skewing you, because they're legacy companies and they have a huge slice of the stock exchange, that is the economy skewed to brown. If you want to shift this, you have to skew it to green for a while until you rebalance. And the rebalancing, you will know you're working when the economy goes green, when emissions start dropping at 10% per annum. And then we're on the right track. So in the meantime, use every messy. It went up 1%, 1.6% last year, up.
Yeah, globally. Yeah, do you think...
Europe flat.
Do you think globally will begin to fall now, or do we still will see an increase going forward?
I've been hoping that for the last 5 years. 2 years ago, we flatlined, about 0.6% increase. I thought maybe we'd turn the corner. Went up again last year. One of the big problems, by the way, is shale gas and gas, because we've now discovered the leakage factors from the pipeline system is far higher than anyone thought. So in fact, the gas revolution, which is supposed to be driving down emissions, has been pushing emissions up. So gas has been a total false lead for us, unfortunately. So yeah, we're messing it up, I'm afraid. So I don't know, I don't think you and I can breathe properly until we're going down 10% per annum. If you want a future, that is.
I just had my second child recently, so I very much like a future.
That's right, and we're all like that. We all want a future. And the thing about the finance sector is they're the ones who have an opportunity to really drive change. So green bonds, first on a simple crude, changing the paradigm of discussion, help. And now the green finance instrument, not just green bonds. Mm-hmm. Green loans, green equity, it all counts. Keep it to a broad climate change theme, don't silo-ize it. Make it look vast, like a tidal wave of change. And then constructing the deals. So we need people to figure out clever ways of using public sector money, like the Danish fund, to mobilise private capital. Like I said, we don't need one, we need 400 of these as quickly as possible. And we need to focus on emerging markets. Enough risk capital that money will actually flow to places like India or Indonesia or Brazil, even though they're volatile locally. How do we manage that risk? Because they don't flow there, we're all lost. So we've got to protect our pension funds, but we're going to have to put a bit of our own public capital, or at least a public guarantee pool, on the line to have any kind of future for our societies. And that's the lesson for the rich.
Do you believe the insurance will? Now we saw on two charts, both in morning and in your, that the insurance is going up annually. Do you think we'll continue to see growth in the range of 30 to 50% annual?
Growth is always choppy, right? There's contextual,
obviously.
But there's a lot of things driving green bond issuers. There's the things I've talked about. Mm-hmm. There's signalling the benefits. There's internal change covered organisations. But we actually have pricing. Lars showed earlier the secondary market pricing difference. Well, it's not a big leap to think if these things are worth more in the secondary market, there might be downward pressure on the primary price, which is what you're getting in Europe. You have treasurers all over the place claiming. I mean, DKB, the Norwegian bank, claimed a price benefit for their recent 1.5 billion euro green bond because of the green flavour. And this is a very common story in Europe. So that, of course, is going to suck in a lot more issuers. Yeah. And from an investor point of view, it's fine because they've got a premium product in the secondary market. Now, that secondary market valuation is going to go up because what we also see, as again Lars showed in one slide, is that when you see corrections, green bonds hold their value. That is gold dust. If you're an investor,
obviously,
that is like
nice risk.
Whoa! So the more that goes out, you are going to see stampedes of money hunting for green bonds around the world. So forget the incentives that the Chinese central bank is doing. That'll be dwarfed by the incentive of a more stable secondary market product.
And how's the green bond market in the Nordics developing currently, as you see it?
Fantastically. The Nordics is the biggest per capita issuer globally of any market. Sweden especially, the largest. Denmark is coming from behind. It was slow at first, but now it's building here. So but as a region, the Nordics is probably the leader in developing this market. You get a situation now in a place like Sweden, where if you are issuing a bond and it's not green, investors are asking you why it isn't green.
You want that trend to go global?
Correct.
Yeah, obviously.
Just think Scandinavia as a global leader on this. That's what we're seeing, and that's what we're going to see.
And the issues, although I remember, if I remember correctly, they were mostly driven by real estate firms.
No, will be. There's a lot of real estate in Norway. Yeah. Because of the big lumpy contribution of Fannie Mae and Freddie Mac, we've now got to about 40% global issuance, which is real estate based. The previous year it was only 20%. So very big issuers coming to the market. In Scandinavia, it's still sitting at about 30% in Scandinavia. All the newest issuers are coming together with property. So public sector building portfolios are issuing. So it'll grow. And that's right. That's because it's important to understand green buildings are critical. Not just pale green, though. We need buildings that properly contribute. So little improvements in energy efficiency are not enough. You've got to have a properly energy efficient building. And that's why standards are needed.
So if you look on these sectors, do you have any sectors that are currently lagging behind or currently?
Japan, the US corporate market.
U.S. corporate market.
Non-existent. There's been half a dozen issues.
And how can that change?
Maybe changing a president.
Yeah, I thought you would say that.
No, I think it's more complicated than that. I think it's also a very litigious environment. And so the independent review, which is really your own consultant saying it's green, doesn't provide enough legal protection. So I think a certification scheme like we're running and like the Europeans will bring in will probably benefit the US market if we can establish there, because it'll give them a bit of, let's call it standards protection against action. So there are a variety of challenges there. And then part of it is education. You know, you more get a few big issuers, the more it'll grow. So it will grow. And when it grows, it'll be like a whale bursting on the ocean.
Like the ketchup bottle and suddenly everybody
exactly
runs out.
But it's not quite there yet. So we're hopeful for the next couple of years. It actually doesn't seem to be affected that much by the Trump market. We're seeing a lot of municipal issuance coming through. So I think the other factors are more important.
Yeah, like I think it was one of the earlier presentations was it Baltimore or something that actually when Trump was decided to leave the French pledge, they said, okay, we're going this directly opposite direction. We don't.
A lot of states actually, and a lot of corporates and a lot of investors. 300 big investors came out of that too. So it's having a perverse impact on US political society.
What is the single most effective driver to increasing green bond issuance?
Investors asking for it.
Obviously.
That's it. I mean, seriously.
Yeah.
You know, if you're an investor, all I ask of you is to say, give me a bond that's comparable in price and yield. You can have the caveat in there, and I'm interested. Then I'll talk to you. Greater access for the green flavour. You know, an example is we had a friend from the Islamic Development Bank in New York recently talking about Sharia bonds, as in Islamic sukuk.
Yeah.
And they're trying to convince US investors that sukuk are a good investment proposition, which they are. But they said, what about if green sukuk? The investors said, oh, we're in. If it's green, we're in. I need all investors to do that. If it's green, we're in. Now, you've still got to make a risk-yield decision. You know, it's got to be a credit decision above all. But all things considered, if it's green, you'll talk about it. If you just make that very clear to everyone, this market will grow gangbusters. So, and this is the way it's grown so far. It has been an investor-driven market so far. And it needs to be an investor-driven market. In China, it's a bit different, although we still have to mobilise investors. But in Europe, in Australia, in Japan, in North America, investor-driven is the only way it's going to work. And we don't need governments at this stage. We need governments to deliver more deals. But if we show them we'll invest, they will deliver more deals, I can tell you, because they're all trying to place the money. They're all trying to get greater access to capital. The story works for them just as much for corporate treasurer. So ask for green.
Great.
And in your case, because you've got children like me, just go a step further and demand green.
Demand green,
and say,
obviously.
not green, I'm not in. Which is what's happening in Sweden already.
Yeah.
You know, we just all got to remind ourselves that the tail risk here is death of the species. It's not that we might lose 10% of economic growth. It's like a pretty dramatic tail risk. It's a small risk, depending on who you're speaking to, but it's a pretty significant risk. And that means we have to do everything within the constraints, but we have to do everything we can. Leave no stone unturned. The positive side is if we get over this, if we do achieve these changes, two things happen. One is we will be embarking on a vast global stimulus of investments to make a difference to the planet, not empty homes in Las Vegas, which is what we did in 2000 and 2008. One. And that will be fantastic for everyone's well-being and for equity around the world if we manage this properly. Two is we'll have learned how to manage the planet. You know, we're like juveniles. We've been messing around in the forest, kicking over trees, not really realising what we're doing. Suddenly realised, oh my God, I kind of wrecked that forest. We now need to become stewards of the forest. Mm-hmm. And that's what this is all about. In 50 years' time, if we're still on a survival track, it'll be because we've understood that our role on the planet, just because of the success of our particular species, has got to change now. And we now have to become considered, careful stewards of sustainability, which is, of course, exactly what pension fund and insurance fund asset managers have to be with their portfolios. There's an incredible synergy with long-term investors and what every citizen on the planet has to become.